Hi everyone, it's Ben Manzo, financial consultant with IG Wealth Management. I hope you're staying cool and covered. It's quite humid out there today. I thought I would talk to you today about the TFSA, otherwise known as the tax-free savings account. And this is something that the federal government came out with back in 2009 in January. So often I feel it's misunderstood, underutilized. It's associated with a savings account. I wish they called it a tax-free investment account because you can invest things such as equity mutual funds, publicly traded shares. So we know that the TFSA, you can contribute and the money grows tax-free. And any withdrawals that come out, there's no tax consequences. So it's a wonderful vehicle to have. You can see here over the last few years, the dollar limit has been 6,000. It has varied year to year, but if you've never contributed, this is the beautiful thing about the TFSA, the contribution space does accumulate and is there for you. So if you've never contributed, today you can put in $69,500 into your TFSA. Conditions to applying for a TFSA is a resident of Canada, 18 years of age, and having a SIN number. So there are investments that are allowable within the TFSA: mutual funds, bonds, bank deposits, GICs, term certain annuities. Investments that are not allowed. So if the TFSA holder has debt, keep in mind that the TFSA holder, it cannot be a joint account. It cannot be held in trust. However, a power of attorney can open up a TFSA under an individual's name. And other types of investments you can see on the slide. So foreign content is also allowable within the TFSA up to 100%. So it's something that you should take advantage of depending on the type of investments you have. Group TFSAs are allowed. You can actually open up a number of TFSA accounts, but you all have to remain within your overall contribution space. Transferring from a non-registered account to a TFSA, if you are the same owner, is allowable, but if you've made money, there is a taxable capital gain at a rate of 50%. So although you've shifted from one account to the next, there will be some tax consequences, again, depending on your own marginal tax rate. So a simple example here is the TFSA versus non-registered. So if a client invests $5,000 a year at a rate of 6.5%, you can see that the TFSA has done better than the non-registered investment, which is pretty self-explanatory, given the tax sheltering of the TFSA versus the non-registered. TFSA versus RSP, so where to invest. So really it depends on a number of things. So the individual's current marginal tax rate and the future marginal tax rate of the individual really does apply in these cases. One thing is, when we're looking at investing in between these types of accounts is, what is the money earmarked for? If it's for retirement and the time horizon is, 10 plus years, then it's going to go into the RSP and maybe you have a higher taxable income. But, if you're going to put money into the TFSA and go aggressive and you need that money in the short term, it's not advisable because markets do fluctuate and you may have lost a substantial amount of money. So you have to be careful and something to consult with your financial planner, or more importantly, come talk to me and I can walk you through that process. So thank you to our friends at Fidelity for providing an overview of the different types of accounts. And I've included RESPs here as well. And you can see things such as general savings, home purchase, education, and retirement. And it does vary depending on each person's unique circumstance. So let's please meet. Again, this is something I'm quite passionate about. If you have no TFSA and you want to understand the benefits of having one in your portfolio, just to have a simple tax planning discussion, you want to understand, the contribution and withdrawal limits and how that applies. Understand, the types of investments that go into the TFSA. And really important, and where to direct the investments. Is it the TFSA? Is it the RSP? Is it non-registered? Or is it in concert with all three? And really what's interesting about the TFSA, although it is a registered product vehicle, you can pledge this as security. So you can use this for, securing a loan or a line of credit. So please do follow me on social media. I do have a seminar this Saturday about financing your retirement. So spots are filling up. Please reach out to me. I'd love to see you there. Thank you so much for your time. Have yourself a wonderful day and take care.